Hi, I'm Aaron Mackey. Today I'll be pitching the TJX Companies Incorporated. It has the ticker TJX, operates on the New York Stock Exchange, and I believe that it is a buy. On the day of evaluating, it has the price of 112.19 as of March 13th. So TJX was founded in 1962 in Framingham, Massachusetts. Today it is the largest off-price retailer in the space of off-price retail. So it sells name brand and designer clothes, rugs, fashion, home goods, cookware, and furniture and other hard goods at steep discounts of 30 to 60 and sometimes even 70%. It has an online website for each of its subsidiaries: TJ Maxx, TK Maxx, Marshalls, Winners, Home Goods, Sierra, and HomeSense. You've probably seen much of these around town. So within the industry of retail, there's off-price retail. TJX operates in this off-price retail space with the other members, Ross, Burlington, and Nordstrom's Rack. Those are in order of market share, and TJX holds the most at 62%. Indirect competitors outside of off-price, but still within retail, consist of Walmart, Costco, Amazon, Temu, AliExpress, and some new entrants such as Shein. Off-price retail did over 80 billion in sales last year, and as I stated before, TJX maintains 62% of the revenue. As you can see on this chart on the right, that's data from 2016 to 2023. You can see that that big blue line on the bottom, TJX has maintained a massive amount of the market share throughout the years. So it is also the only one with an online presence, as opposed to Ross and Burlington, which shut down their online shops in around 2014. So I believe TJX is a buy. On the day of recording this, it's on 112.19, and I believe that within a 5-year exit, it is going to be worth and is worth today $173.60, $173.60 with a 54.8% upside of today's price. So the reasons for this are TJX's economies of scale and its market dominance as the largest competitor and the biggest outreach. It is able to sell more product to more people, which means that it can buy more product to sell for cheaper prices per unit, and that gives them a cost advantage. TJX also plans to open 1,300 stores in the future, recognizing a lot of optimism for the business. They have historically been able to build these very fast since in 2014 they had 3,200 stores, and by 2024 they have 5,000 stores. And the same management has been able to consistently grow those throughout that. It's also regionalized and adaptive due to a wider reach throughout the world as opposed to its competitors that operate within the US. It can be able to customize its geographical sales even more as they profile the buyers. So I believe it has a very wide moat because of its size and economies of scale, as stated before. And it's going to be able to continue growing because as new entrants and current people in the current companies in the market, as they sit there, they're not going to be able to have the same cost advantage that TJX has. And because of this, they're going to have a high barrier to entry. So over the last 5 years, they've seen 35% in their annual revenue, but their net income has increased 48.7%. This means that they're getting more efficient. And as they keep going on, they're going to be able to make more income per revenue, which is going to be extremely good for EPS and other statistics like that, signifying a healthy business. So considering this, the EPS last year was 3.86. And then this year it's 4.86, leading to a 25% increase in EPS. The ROE of 65.5% means that they're having a lot of return on investment and return on equity for what you're putting into the business. So I choose to use a DCF to value my stock because I believe that it has more variability and more ways to account for differences in market. So on the price of doing this, on the date of doing this, I started with the price of 112.19 cents. So I chose a growth rate of 8%. Over the last few years, they've seen a 6.8% annual consistent growth. And last year they had an 8.9%. So I believe that 8.8% is reasonable and can be able to be consistently maintained as they're still recovering from COVID-19, even though they had a massive normal jump from it. And then I used the discount rate of a weighted average cost of capital as a 9.3% that I calculated. All of this comes together to give me an intrinsic value of 173.6. Their current value, the cash flows that they started with was 3.53 billion. So I believe that there are some risks here, and that's one of the most important factors as we choose a stock. So the foreign tariff environment that is created by the current administration in the US, they on the quarter four earnings call, TJX stated that they have dealt with tariffs before and they will deal with them again. So the tariffs in Canada and in China are going to be affecting their business, and they have made deals so far on accounts payable that is going to lead them to have a lower quarter one and quarter two earnings. Also, potential large-scale supply chain disruptions, such as COVID-19, had a big impact on their business. So they can be able to use AI in the future to be able to adjust to these quickly and be able to switch their purchases and their shipments within countries to make this easier. Also, increases in online shopping could be very bad for business due to TJX's 1% of online shopping that made up 1% of their annual revenue was only made up by online shopping last year, which means they need to either double down on online shopping or they need to put a lot more money into the in-person stores that they're building, which they are doing. So management, Ernie Herman and Carol Merowitz, have been with the company together since 2007. Since then, they have led the company through recessions and COVID-19. Through the recession, they were able to maintain a 4% net sales growth, which is extremely valuable for that time, considering most companies weren't even able to make a profit during that. This, to me, signifies a recession-proof business that would be able to hold through in the future. They also saw an extremely fast recovery from COVID-19, consisting of 2 years. From 2020 to 2022, they were able to essentially rebuild their revenue. I think that their effective inventory allocation between different locations outside the US that Ross and Burlington don't have will also help them a lot in the coming days. So their environmental and social governance is also above average within their industry, consisting of an 87% rank. Ross only had a 65% rank, for example, and Burlington's was even lower than that. So considering it's this high, that has good looks for the company that's in the retail space, which has a lot of waste. So by 2027, they're planning to divert 85% of their waste from landfills, go to other spots where they can be able to recycle them and reuse it. They're also looking to have net zero emissions by 2040. So they've also provided 30 million meals, 500 shelter nights, 405,000 units of clothing, and 23 million in healthcare research to the society and give back to the world. And then they also had a lot of diversity and inclusion advancements, consisting of 68% of managers global are females, 35,000 of them are females, 79% of global promotions are women, 37% of management, and 51% of promotions were people of color additionally. So that brings us to how will AI impact this business? So since it's a mostly brick and mortar business, it's hard to find solid research and solid evidence of what they've stated to do this because it's hard to increase it. So I think the best way that they can do it is to increase and profile in-person shopping experiences to better tailor them to the individual areas that they're being sold in. Also to add to the buyer's experience and increase the treasure hunt experience that TJX stores are known for. They can also help the supply chain be more optimized and consistently keep them safe from events like COVID-19 as they have to avert stuff quickly. So I think that the biggest risk of AI is it's just expensive to start. Every business is going to need it coming up, and the down payment they're going to need might be a lot harder for TJX and in-person business to get their ROI back on. Thank you for